Welcome to this explainer. I am so thrilled to have you here today because honestly, we're looking at one of those truly bizarre days in the financial markets where the numbers on the spreadsheet are really only telling half the story. We're looking at a day of corporate announcements that proves beyond a shadow of a doubt that how you make your money and how you brand your business matters just as much, if not way more, than simply hitting your quarterly targets. Today, we're going to unpack three completely distinct flavors of market performance that all somehow collided on the exact same Friday. To really wrap our heads around what just happened, we kind of have to look at this incredibly strange intersection we find ourselves in right now. I want you to picture this. You've got the college football offseason silly season, complete with wild conference realignment rumors and NIL money just flying around like Monopoly cash, smashing head-on into the buttoned-up, traditional world of heavy-hitting bank earnings. I know, it sounds totally absurd, right? But this is exactly what the modern market looks like. It's a place where cultural relevance and balance sheet strength are quite literally fighting for the exact same investor attention. Which brings us to the central question of today's explainer. What on earth does a flashy crypto firm actually have in common with two massive legacy bank earnings reports? Now, on the surface, absolutely nothing. But all three of these corporate stories unfolded simultaneously, and they're giving us this fascinating look into the rapidly shifting expectations of today's investors. Okay, let's dive right into this. Here is our roadmap for today. Number 1, Fifth Third's Comerica jackpot. Number 2, crypto enters the gridiron. And number 3, Truist unrewarded blowout. All right, kicking things off with part 1, Fifth Third's Comerica jackpot. So this is the story of the ultimate traditional banking overachiever riding a massive, perfectly executed acquisition high. Just take a look at these numbers. Fifth Third Bancorp posted a quarter so undeniably good that, honestly, an M&A banker would probably want to frame the press release and hang it right in their office. We're talking a Q2 net income of $763 million, which is a massive 29% jump from last year. They delivered an adjusted earnings per share of $1.02, handily beating the 97-cent consensus from Wall Street. And to top the whole thing off, their net interest margin expanded really nicely to 3.36%. They didn't just beat this street here, they absolutely flexed on it. But where is all this incredible momentum actually coming from? Well, the crucial point is this number right here, 48%. You see, the Comerica acquisition basically acted as a rocket booster. It drove net interest income up a staggering 48% year over year to $2.22 billion. Now, in the banking world, a 48% jump in net interest income isn't just a solid win. It is a monumental achievement that validates an entire corporate strategy. And you know, this wasn't your typical, hey, we bought a company, let's just cross our fingers and hope for the best kind of story. This is a story of immediate integration and execution. As the quote perfectly captures, it's like a trade deadline acquisition that's already fitting the system before the playoffs even start. The craziest part? The final, sort of unglamorous IT systems conversion doesn't even happen until Labor Day weekend. But Fifth Third didn't just add payroll, they added instant production. And that's exactly why, despite a very narrow miss on the headline unadjusted EPS number, Wall Street definitely noticed. When a bank merger actually works on schedule, investors absolutely reward it. And sure enough, their stocks successfully caught a bid. Moving right along to our second story, crypto enters the gridiron. So here we have the old guard, represented by Legacy Telecommunications with Jones AT&T Stadium, stepping aside for the completely new guard, Galaxy Stadium. Galaxy Digital just inked a massive 15-year, $70 to $75 million naming rights deal to completely rebrand Texas Tech's football stadium. And this isn't some distant plan happening years from now. This literally kicks off on September 5th against Abilene Christian. But wait, because it actually gets far more strategic than just painting a shiny new logo on the grass. For a Texas Tech team that's fresh off a Big 12 title and a playoff appearance, this deal goes incredibly deep. Galaxy is now the official data center and digital assets partner for Texas Tech Athletics. This actually ties the physical stadium directly to Galaxy's Helios facility, which sits just 60 miles away and boasts a massive 1.6 gigawatts of approved compute capacity. Plus, they bolted on an NIL, name, image, and likeness component for the student athletes. So what we're seeing here is hard infrastructure and mainstream brand awareness merging in real time. Which leads us to the really big takeaway for this segment. Crypto is hunting for Main Street legitimacy, not just trading volume. By plastering their message on a 60,000-seat billboard every single Saturday this fall, Galaxy Digital is proving that digital asset firms are aggressively buying into mainstream cultural real estate. They're essentially saying to the public, hey, we aren't just a trading app on your phone anymore. We are part of your weekends, your sports, and your local infrastructure.
It's a really brilliant pivot toward establishing permanent, undeniable legitimacy.
Okay, let's slow down the pace a bit as we enter our third and final act, Truist's unrewarded blowout. Look, the underlying metrics here are nothing short of phenomenal. Truist Financial came out absolutely swinging. Earnings per share, $1.23, completely smashing the $1.08 consensus. Net income, $1.5 billion, representing a massive 37% jump. Revenue climbed 5.6% year over year to $5.27 billion. And when you look under the hood, this was powered by investment banking, trading, wealth management, and a massive 17% jump in non-interest income. Literally, even their digital transactions grew 7% to 93 million. By every single traditional metric we have, this is a blowout quarter.
And this brilliantly illustrates the sheer irony of today's market. You have this towering 37% surge in net profit, fundamentally flawless execution across the board, and the market collective just sort of shrugged its shoulders. The stock basically went nowhere. In fact, if you watched closely, it even dipped slightly on the day.
I absolutely love this quote because it captures the dynamic perfectly. What happened to Truist is basically the financial equivalent of a team going 15-1 and still not getting a playoff bye because the schedule was too easy. In the 2026 banking sector, expectations are baked into the cake so deeply that incredible, fundamentally sound performance earns you absolutely 0 style points. You did great? Cool. That's exactly what we demanded you do in the first place. So the major takeaway here is that big regional bank beats are simply becoming table stakes. The market is no longer looking backwards and asking, well, how did you do last quarter? Instead, investors are staring aggressively into the future asking, okay, what's next? Because perfection, absolute, unbroken operational perfection, is already priced into the stock. If you just beat the numbers, you're really only meeting the baseline requirement to stay in the game. Which brings us to our final thought for today. Just look at the 3 stories we just walked through. We saw a banking merger print cash instantly and get massively rewarded. We saw a crypto firm buy a 60,000-seat cultural monument just to gain legitimacy. And we saw a legacy bank post a staggering 37% profit surge only to be completely ignored by investors. So I have to leave you with this question. If a massive profit surge gets completely ignored while crypto buy stadiums and flawless mergers are the only things getting a nod, what does it actually take to impress the market today? Are we literally valuing cultural spectacle over fundamental cash flow? It's a totally fascinating shift in how businesses are rewarded, and for sure, it's something every investor needs to be watching closely right now. Thank you so much for joining me for this explainer. I really hope this helped connect the dots for you, and I will catch you on the next one.